So Introduction to Business Processes is what I have entitled our first major discussion. It is somewhat reflective of some of the things that were in Chapter 1 of your textbook, and it's provided mainly for us to provide an overview of some of the things that we will be looking at more in detail as the semester goes along, as well as providing us an opportunity to do some review for some of you, or to cover some new content perhaps for others of you. But we talked about last time what is a business process, how does having a process-oriented view differ from having a functional view. We talked about the silo effect and what is meant by the term enterprise systems or enterprise information systems. And although we didn't, I don't think, right on this particular slide last time or necessarily look at it, we did talk about this topic, that we can't get rid of the silo effect just by saying we're going to invest in an enterprise information system. It really is much more complex than that, because it really requires a human change, a cultural change, a change to the way we approach work. And so while technology may help with that, it may make it worse potentially, as people no longer need to care about what happens in other parts of the organization, as they can just look into the computer for their work and have that be the end of their evaluation process. So this was a good place for us to wrap up our time together last time. And we'll jump in today with a brief look at this diagram, which we may come back to a few different times as this semester goes along. I think you'll see this picture many places in your textbook, including, I think it appears actually in a picture on the cover. This gives us an overview of some of the major processes we are going to talk about this semester, and it's intended to illustrate, at least in a general way, how those processes relate to one another. What's really ironic about this diagram is the people who composed it really tried very hard to not make a spaghetti mess of it by having lines going from every block to every other block. So they've kind of introduced ovals and other things to try and clean it up a little bit here. But let's kind of hit the main points of what some of the things we should get from this diagram are. At the heart of an enterprise resource planning system, whether we're talking SAP ERP or any ERP system, particularly for a manufacturing operation, there are three key business processes. We have buying, which is something that is fairly universal in business. We have selling, which is fairly universal in business. And then we may have, and we will have for a manufacturing entity, making things. So those are really three of the core business processes: procurement or buying, production or making, and fulfillment or selling. Now, the lines that connect these illustrate data passing and relationships that we'll come back to in just a moment. But apart from those core three, two other really critical parts of an enterprise information system are sitting down here in this green oval at the bottom, and that being financial accounting, which is the accounting record keeping that we do dominantly for external reporting, say to the IRS, to the Securities and Exchange Commission, to our investors. And then managerial accounting, which also goes by other terms such as controlling or cost accounting, that we do for our own benefit. So really, if we were to number these 4 and 5, and my numbers here are just arbitrary, those would be the 5 core business processes that you see enabled by most enterprise information systems. The things around the perimeter then are certainly of no lesser importance in many organizations, but may not be relevant in some companies and may be relegated to a different system than these core 5 are done in. For example, it is not unusual for companies to use a totally different enterprise information system for the sake of their human resources or human capital management. Perhaps you've heard of PeopleSoft. It's a software product that a lot of companies use. PeopleSoft was bought out by Oracle, and I think they have continued to use that name as well as put the Oracle name brand on it. But it wouldn't be unusual for a company to use, let's say, SAP ERP for the 5 that we enumerated previously, but then use PeopleSoft for their human capital management processes. So the things that are denoted by the squares here are important because they reference key business processes that we will talk about. But the interconnecting arrows are perhaps even more interesting. And my thought to you is that by the time we end our discussions this semester, I would hope that you would actually be able to label these arrows with the names of particular documents that are used for the sake of what these arrows indicate, which is information exchange. The idea here is the reason why we put all of these business processes in one system is to facilitate the exchange of information. So some of this you should know already based on things that you have done in previous classes, playing ERP sim and so on, and some of these we even, I think, have discussed in our earlier sessions together. But let's kind of dig into that for a moment here. Can someone describe to me in just a generic way, without naming documents or anything else, just give me a description of what is the relationship between the procurement process and the production process? How do they relate to one another? Yes, sir. Okay, in order for us to make stuff, which is the production process, we require raw materials. Where do we get the raw materials from? Well, we don't go out and steal them. I suppose if we were a mining company, some of them we might dig out of the earth or something of that sort. But in most instances, we are going to be looking at buying things that we then use as components in our production process. So the relationship between procurement and production is a very important one because procurement has to buy the raw materials that production needs to use in production. Okay, now let's get a little bit more in detail here. How does the production process communicate to the procurement process that you need to buy something for me? What document is used to do that? Close. Purchase requisition. So the production people will send a purchase requisition to the procurement department asking them to purchase certain things. The procurement department then will do their job, which will involve perhaps searching for suppliers and a number of other things that we will dig into in more detail as the semester goes along. They will create a purchase order. Now, let's think about this from the perspective that all of our communication happens by way of document flow, okay? So what is production waiting to be told in response to their purchase requisitions? What's that? Well, that would be nice to know, but there's something even more important than we ordered it. What are we ultimately looking to have happen? It's here, okay? We need to know that the stuff is here. Procurement replies to the production process with a document that is called a goods receipt document. So there's the creation of a purchase requisition, and then at some point in the future, there's a reply with a goods receipt document. And so that is the way those two areas communicate with one another. And the person who created this diagram, rather than put in the arrows going each direction like I did here, they saved space on the diagram just by putting in those double arrowheads. But one way that the production process and the procurement process interact is through the exchange of purchase requisitions and goods receipt document. Okay, so let's kind of explore a couple of other things that you may know from past experience. What is the relationship between the fulfillment or selling process and the production process? Who can just, first of all, get us started here by describing narratively how those processes relate to one another? What's the relationship between selling and production?
You need to make sure that you have products in stock to sell them.
Okay, I might need to know that I have stuff in stock, absolutely. Or what would be another dimension of the relationship there? What's that?
If you receive an order for it, you get production of it.
Okay, if I, in particular, if I'm running a make-to-order company, you might remember there's different strategies we can employ, but a make-to-order company makes things in response to customer orders. So in that situation, the order comes in and the fulfillment process needs to communicate to the production process, hey, you need to make this for me. So in fact, what might actually happen here is the fulfillment process will send notification of a sales order to the production process. And then at that point, what's going to happen, if we continue with our diagram here, the fulfillment process says, hey, I just sold something, sends that to the production process. The production process says, oh, we need to buy stuff, so it sends a purchase requisition. Procurement responds back later with a, hey, your stuff is here, and then the production process is ultimately going to respond. There's a couple of different ways this could happen, but one of the things that will happen is production confirmation. Hey, I made the stuff you asked me to make. It's done. Okay? Now, there's other ways that this could play out, but the scenario that what we just described here illustrates the relationship between these processes. Remember, we observed last class or even the class before that business processes all have a trigger, and the trigger is the creation of a document. Well, this illustrates that in that the way the processes communicate with one another is through document flow. Now, what about these guys sitting here at the bottom? Notice how pretty much everything on the screen connects up to financial accounting and managerial accounting. And that's because pretty much everything that we do here is going to have an implication for us in our record keeping. Now, I've got to figure out a way to ask this question such that you can give me the right answer. So give me a second here. Let's assume that we are a car dealership and we do not operate in a make-to-order situation. We operate in a make-to-stock situation, which means that our salespeople only sell the cars that are already sitting on the lot, okay? And just to further describe this situation, let's imagine that although we have a car lot, our salespeople also drive around town and try to sell to people vehicles in their place of business. So if you are a salesperson and your job is to sell the products that we have available, what is one of the key facts that you need to know in order to do your job well? What vehicles we have available to sell, inventory levels, okay? Now, don't overcomplicate my question. What key fact are you looking for in terms of per vehicle? What do you want to know? What? I heard somebody mouth something. What were you saying? Well, no, not to, I mean, I might need to know that to actually entice the customer to buy it, but what do I just need to know? I mean, it's not a different answer than you gave me. I need to know what? No, not to sell it. I don't need to know cost of goods sold. To sell it, I need to know how many we have, right? All I care about is the count of the number of vehicles. So for example, I don't know, I'm selling Corvettes, and I need to know that we have 12 Corvettes in stock. As a person engaging in the fulfillment process, I need to know the count of inventory. Now, do people that are doing accounting need to know about inventory levels? Yes. What do they need to know about inventory that might be different than what I need to know if my focus is on selling? The value in terms of money. So while a salesperson might think in terms of we have 12 Corvettes in stock, a financial accountant might think in terms of we have $400,000 of Corvettes in stock. One of them cares about count, the other one cares about dollar values associated with things. So even about entities that we have an interest in, different processes have different concerns. To a certain degree, the person engaged in financial accounting, they don't really care how many we have in stock. They just want to know what the dollar value is. Similarly, the salesperson, let's assume we have 3 different lots in town. We have a west end of town lot, a north end of town lot, and a south end of town lot. The salesperson might want to know what color cars are available at which lots. The financial accountant just needs to know what's the dollar value, and it really doesn't matter what's where. In a general sense, I just have to reflect on my balance sheet how much money we have tied up in assets related to these Corvette automobiles. So different parts of different processes will have different concerns here. We'll dig into more of this as we go along, but these are the kinds of things that we'll spend time digging into. And by the time we get to the end of this semester, I would hope that you would be able to look at every one of these lines here and put on that line one or more documents and one or more sets of descriptions of information exchange that would describe the relationship between these different processes. Let's take the next couple minutes just briefly going over some of the things talked about in your book as it relates to these business processes. The procurement process, focused on buying. Typically what we're talking about is acquiring materials needed from external sources. Now, we will talk about later this semester the idea of internal sourcing, where instead of actually buying it from an outside company, we make it ourselves. That's another option. And then we'll also talk about things like stock transport orders that enable us to actually move something from one location to another to keep us from having to buy it. But generally, when we think in terms of procurement, we're thinking about contacting an external company and actually having them supply something to us. But realize the broader focus of procurement is solving the we need X problem. And if we can solve that by making it or in some other way acquiring it legitimately, that's fine. So it's not always buying it, but most typically it is. There are a lot of different functional areas here. There are a lot of different steps in the process, and we will decompose these steps and talk about them in much more detail here. But we have create a purchase requisition, create and send a purchase order, receive materials, receive an invoice, and send the payment. This is an example of a basic business process. Now, there are lots of different decisions we can make as a company as far as how we are going to account for this in our record keeping. And let me just briefly describe one of these scenarios to give you a sense of the kinds of things we're going to talk about more as the semester goes on. There is the concept of what is called commitment management. Let me give you a scenario here. We're going to buy something, and we make aircraft for the military. And so we buy things that tend to cost a lot of money from our suppliers. And we're getting ready to make a new type of military aircraft, and so we need to purchase, we'll just say, aluminum. And we have a supplier for our aluminum, and we notify them that we want to purchase basically $4 million worth of aluminum from them. Okay, that's a pretty big order, I would assume, for most companies. Now, if we look at this business process, we create the purchase requisition, and we create and send a purchase order for $4 million of aluminum to the aluminum company. We sent that out as a purchase order. What's one of the things that you know that's significant about a purchase order? What's that? It's an authorization. What else? It's a legally binding document. So we have sent out this purchase order to another organization, and they have accepted it and said, yes, we will send you $4 million of aluminum. Now, here's my question for you that I will answer after I ask it. What is the financial accounting implication of creating and sending a purchase order? And the answer is yes, sir. You want to take a shot at it? Okay. There's no financial accounting implication at all. It is, in a financial accounting sense, it is not something that results in any debits or any credits in the way most organizations do financial accounting. Now, you might look at this situation, and from what you know about accounting, you might say, that doesn't seem right. My company has just obligated itself to pay for this $4 million worth of aluminum, and you're telling me that isn't reflected anywhere in my accounting records. And that's what I'm telling you. I'm telling you that the way most companies do financial accounting, the first time this shows up in their financial accounting records is when one of these two steps happen right here: receiving the materials or receiving the invoice. Okay? Now, let's dig into that a little bit more here. Would you agree with me that the bill might show up before the materials show up? Yeah, that happens all the time. The bill might show up on Monday and the materials don't come in until Friday. Or it could well be the materials show up and the bill follows it. So really, these two steps could happen in either order. Now, what's not going to happen is I'm not going to receive the materials before I create and send the purchase order, because then that would just be a gift, because I haven't obligated myself to actually pay for it because I haven't sent the purchase order. So we can feel pretty confident that the create purchase requisition and the create purchase order are going to happen in that order. But the last three steps in this process, we might receive the invoice and pay for it before the materials even show up. That might be something that happens from time to time. But if we look at this from a financial accounting perspective, those of you that have taken an accounting class before should be well equipped to answer this. When I receive materials, what financial statement is my receipt of materials going to appear in? What financial statement? Okay, let's back up. Materials are classified as what in accounting? Assets. Where are assets reflected in my financial record keeping? Balance sheet. So when I receive materials, this is going to hit my balance sheet because I have $4 million in aluminum now that I didn't have before these came in. Yes, sir. Let me come back to that, okay? Because that's the heart of the question we're looking at here. So the first thing we know for sure will happen universally is that when we receive materials, it's going to hit our balance sheet, okay? But notice we have materials, but what about the payment of that? For most organizations, they will record the accounts payable part of this when they receive the invoice. So I get an invoice from Acme Aluminum for $4 million, and at that point, I record I have an account payable for $4 million. And then I do some reconciliation. I say, I have $4 million in aluminum. I have a bill for $4 million. I have a purchase order that says I intended to buy this. Time to pay it. Send the payment. Sending payment will be reflected in what financial accounting document? Money is considered to be what? Balance sheet is the answer to my first question. Money is considered to be what, though? No, money is not income. Money is an asset, so I now have less of it. So in the grand scheme of things, what just happened here on my balance sheet is I have less of one asset, that being cash, and more of another asset, that being aluminum. But let's back up to where we started, and the question was raised a moment ago. How is it legitimate that I created and sent a purchase order, and the first time I recognized an entry in accounts payable was when I got the invoice? If you were the top manager of a company and were really concerned about monitoring your company's cash flow, wouldn't you want to know earlier than that you had a commitment to pay this $4 million bill? And the answer to that is yes or no, depending upon how you want to run your company. This is called commitment management. If I say, yes, I want to engage in commitment management, I literally go into my SAP ERP system and toggle on a checkbox. You will do this in one of your labs, although it may not appear until later in the semester. When I turn on commitment management, I recognize the liability simultaneous with sending the purchase order. I say, oh, I'm sending a purchase order for $4 million. I know I'm going to need to pay for that. So I trigger the offsetting liability when I send the purchase order. If I turn commitment management off, I don't care about that commitment, and I only record the payable when I get the invoice from the supplier. So this is an example of some of the more detailed elements of the procurement process and how it is reflected in financial accounting. These are the kinds of things that we will dig into in much greater detail as the semester goes along. What happens if I order $4 million in aluminum and the truck backs up to my dock and drops off a whole bunch of aluminum? I don't know how aluminum comes, if it's sheets or rolls or ingots or whatever. And the driver hands me a sheet to sign, and I ordered, let's say it's 4 million pounds of aluminum at $1 a pound, and the truck has on it 4.2 million pounds. What do? Do I take the 4.2 million pounds or do I not take the 4.2 million pounds? The answer to that is, depends on how I've elected to execute this process within my organization. And if they drop off to me 4.2 million pounds, did that just obligate me to pay them $4.2 million? These are the kinds of things that when I configure my enterprise information system, I need to set up as a part of the processes that we're going to talk about. So the idea here is that you've talked about perhaps the procurement process in other classes that you've taken, but we're going to talk about it in much, much greater detail as the semester goes on and look at all of these things. Now, just as an aside, everything we just talked through, we're going to spend a lot more time later on in the semester going through in detail. So if you're really fuzzy about all of that sequence there, that's fine. We'll come back to it. the main point I wanted you to get is there's actually a lot of complexity here that we have to know in order to be able to execute this process effectively within our organization. The production process. Production process is focused on making things, and the idea here is we need stuff, but instead of getting that stuff from an external supplier, we get the stuff from making it ourselves. There's a classic question that is often discussed in business in a variety of contexts, but it's often called the make versus buy question. What do we make ourselves versus what do we buy from a supplier? And it's often a very challenging question to answer because there are some things that we could make, but we elect not to. There are some things that we might be able to make cheaper than we could buy it, but we still elect to go for the more expensive option because it just makes sense in the context of our overall operation. But looking at make versus buy is a key decision point for a lot of organizations. Well, if we are going to engage in production here, we have the request for production followed by production being authorized, and then we have raw materials being issued, and then we actually create the product, and then the warehouse receives back into storage the finished goods here. Well, lots of documents going on in this process. The document that requests production, you might remember from playing ERP Sim, is what? What's this document right here that requests production? Anybody remember? It starts with PO, but it's not a purchase order. Planned order, yes, very good. A planned order actually requests production, and then what document actually authorizes production? It's also something order. This is a production order. So we have a planned order and then a production order, issuing of raw materials. This is one of the steps that happen for you automatically in the context of ERP Sim. Once you issued a production order, the warehouse, or excuse me, the factory just magically started making stuff. But in the real world, the people that work in the warehouse have to pull all that stuff together and engage in a goods issue. And they issue the material to the people that work in production. And then when the people are done with production, they issue a production confirmation that corresponds with the production order. And then they also will send the material back to the warehouse, where the warehouse issues a goods receipt, which offsets the goods issue. Goods receipt. Where else did we see the concept of a goods receipt? Where else did we see the concept of a goods receipt? In procurement, right here, where we received materials into the warehouse. The same document that is used for memorializing that, hey, we just got stuff in from a supplier, memorializes, hey, we just got stuff in from a vendor. Now, here's an example of the kind of stuff that you might at first glance be inclined to think the people who designed this software and use this are crazy. Okay? Goods receipt and goods issue have a relationship with one another. You can see that, right? One is basically, I'm giving you stuff, and the other is I'm taking stuff from you. These things right here get to the heart of something that is critically important in any ERP system, and it is materials management. What do I own? How much of it do I own? What's the value of it? And where is it? The U.S. military runs SAP ERP. Why? Well, they've got a lot of stuff to keep track of. We're talking weaponry, we're talking people, we're talking bullets, we're talking supplies for their cafeteria. They've got a lot of stuff to keep track of and make sure everything goes where it's supposed to go, when it's supposed to go there, and so on. So keeping track of goods as they move around is really, really, really important. If I work in the warehouse and I give something to the production line for them to use in making something, I need to do that in a formal way. Otherwise, somebody shows up to check my inventory and they say, hey, where's the 10,000 pounds of whatever that I'm expecting to see here? I should be able to say, oh, well, we issued that to production, and here's the goods issue document that memorializes it. Or more realistically, we would want them not to even ask the question because they knew it was issued to production. Well, back to the part where I said you're going to think that the people who design these systems are crazy. Goods issue and goods receipt is memorialized on a materials management document. Every one of these documents has a goods movement type. A goods movement type is a 3-digit number. There are hundreds of these. As I recall, receiving material into inventory from an undesignated source is goods movement type 561. There are hundreds of these. You will work with these this semester. Every time a material changes hands, I need to know where it is and why it moved, because I have got to be able to track this. Because what happens if I can't? What is this critical for? Accounting, absolutely. And why do accountants tend to care about this? Let me ask you it this way. What if I didn't have these kinds of controls? Stuff might just disappear, okay? We don't want that to happen in our organization. If any of you have ever worked retail, particularly retail at a place that has certain things that are like really, really high value items, they might like get their own special storage. They might be stored in a locked cage, or even in some cases, they might be stored in a locked safe. And in order for those things to be pulled out, and then when they're sold, we keep very, very precise records of what's happening here. If we don't have this type of control over our materials, stuff can just disappear. The Pentagon orders 500 tanks, and those tanks get put in locations all around the world. Might somebody want a list of where every one of those 500 tanks are? You better believe it. Does that list need to be accurate? Yeah, that's really, really important. Have you ever gone like to a store and wanted to buy something and it's not been on the shelf, and they check the computer and they say, oh, we have 5 of them in the back. And then have you ever seen the salesperson walk to the back only never to materialize again, or to come back and say, computer says we have 5, but I can't find any of them? Well, we can't have that happen when what we're talking about is tanks. You know, the general can't say, okay, move your 5 tanks to this other location because we're getting ready to start a battle. And the person responds to say, tanks? What tanks? We don't have no tanks. Oh yeah, I think we moved and just left them sitting where we were before. I hope they're still there. I hope nobody took them. We can't have that happen. We've got to be able to very precisely track this stuff. So in an organization, everything we buy has to be trackable. Part of this is for the sake of security. We don't want stuff just disappearing. part of this is also because of accounting and pesky people that show up from time to time, like auditors, who want to make sure that our accounting records they actually have integrity, that they're actually accurate and reflect the state of things in our organization. So I realize this slide is talking about production here, but what I've focused on more here is this idea of materials in our organization form the heart of what we do a lot of information exchange about in our organization. And every bit of this is memorialized in these various documents that we can go in and track. So we would have potentially total transparency where, let's say we make, I don't know, we put together laptop computers in our company, and we buy processors from Intel, and we buy hard drives from Western Digital, and we buy all of these different components. And as we make laptops, we get an email from Western Digital that says, hey, we sent you a batch of hard drives that are bad. Please pull them from production. We should be able to tell which of our laptops those bad hard drives are in if we have followed our processes the way most organizations would like us to be able to do so. So production, clearly a very important process in our organization. We'll kind of pick up the pace here on some of these. Fulfillment, this is selling stuff to the customer. We have salespeople that they go out, they receive orders from the customer, and they create a sales order document, and then the focus shifts to the warehouse where they get the stuff ready and they ship it out, and then the accounting people create and send the invoice and receive payment. Now, this is the default fulfillment process. But if you've ever bought things from Amazon, you realize that this actually plays out a little bit different. First of all, you do go onto their website and you create the sales order, but as a part of your keying in the sales order for them, you're going to actually pay for it simultaneous with placing the order. And then Amazon is going to ship it out to you, and you're going to receive it. So a good example of how we might execute this selling process very, very differently. I will caution you about something that will save you a lot of angst. There will be many times this semester where in your labs you will go into the system and put an order into the system based on instructions. The instructions will tell you to choose as the order type standard order OR. Do you know that when you go and look in the system, you will see many, many, many different kinds of orders that you can put in, including, I believe it's 5, that have the text description standard order. And there's a standard order OR, there's a standard order OR1, and there's a standard order with other codes associated with it, and then there's lots of other kinds of orders as well, simply reflecting the fact that in an organization, there are many different ways that we could execute this fulfillment process depending upon what it is that's actually going on here. In fact, this order could be an order for manpower. You know, basically the customer's asking us to do some work on their behalf, and so we're not going to actually be preparing goods to ship out to the customer or sending them, but we are going to be expecting the customer to pay for it. And so there are different ways this could be executed. The reason why I brought up this right here is because if you choose standard order but with a code other than OR, it won't work right. And what you'll be very tempted to do if you're not careful is to choose standard order OR1, because it actually shows up on the list before standard order, and standard order OR1 will seem like it will work, but it doesn't actually work. So got to be careful about that, because there are lots of different ways this order process could actually play out in an organization. Material planning. This is matching the supply of materials with the demand for materials. In a broad sense, this is one of the things that made your playing ERP sim very, very challenging. ERP sim would be really, really easy if you had an infinite supply of all the different flavors of muesli. But you don't. You had to figure out how to manage your plant to make the different flavors and the different box sizes that you wanted to. So you had to think through, okay, what's my demand going to be from my customers? And on that basis, how do I match that supply? You made all of those decisions with your teammates in ERP sim. Would it surprise you if I told you that there was a way for the computer to do all of that for you and optimize that? It would have made ERP sim not so much fun. And in fact, that functionality is turned off in the system. But in the real world, what happens here is you load up all of your forecasts for customer demands, and you let the system help you assess different manufacturing scenarios and other things. And in fact, you can do simulations, you can do various ways of kind of playing what if and looking at different things here. All of that falls into the category of material planning. There are a lot of processes in an ERP system that are not focused on making and buying stuff. One of those is what's called lifecycle data management. And it's kind of a whole different category of functionality. ERP sim did a number of things for the sake of making the game really, really simple that would never, ever, ever happen in the real world, because companies would find themselves having trouble, either legal trouble or more realistically, just practical trouble. One of the things that you did in ERP sim is, let's say you were on team Q. You had a product, QQ-F01, that, let's just say for the sake of argument, that was 1 kilogram blueberry muesli. Okay? Everybody with me so far? And in the context of ERP sim, after you had played the game for several weeks, you were taught that you could go in and modify the bill of materials and change the formulation of this product. And in fact, you could change it to strawberry muesli if you wanted to. But let's assume in my scenario here, you wanted to change the formula such that instead of it having 25% blueberries, it would now have 28% blueberries. And you made a corresponding adjustment in the other raw ingredients to offset that. You probably did some things like that when you played the game. This is a highly unrealistic scenario in the real world. Why do I say that? Can anybody tell me why this might create a problem in the, quote, real world? I have one code associated with two different products. Kind of silly hypothetical scenario. I get a call one day from someone that says, my son just ate a bowl of your blueberry muesli, and he's allergic to blueberries. And if he ate a blueberry muesli that has more than 27% blueberry muesli in it, he's going to die. Is my son in danger or not? How do you know which formula he ate? You say, read me the code on the box. And they say, the code on the box is QQ-F01. Quick, tell me, is he going to die or not? Oh, I don't know. Same code. Same code, two different products. We can't have this. This is not realistic. In a real-world scenario, every time we change anything about a product, we're going to have to reflect that in our record keeping. I have had teams do this before, where they change the 1 kilogram blueberry muesli to like a totally different flavor, and then they go back into the data warehouse to do some analytics on it, and they discover that they can't distinguish the old formulation from the new formulation in the data warehouse. And it's totally based upon this simplification that was part of making the game real easy to play for everyone. Well, in the real world, what happens is we might have a product QQ-F01, but then we might recognize that, you know, what actually happens in the real world is we make some of this in plant 1, and we make some of this in plant 2, and we make some of this in plant 3. And it's really, really, really important to us that no matter what plant a customer gets their muesli from, we want it to taste the same. All right, that's the key factor here. But in plant 1, we get blueberries from the north. And the blueberries in the north aren't so sweet. So when plant 1 makes this blueberry muesli, they actually add more sugar to offset the fact that the blueberries are a little more tart. Plant 3 makes this product. They get their blueberries from the west, and those blueberries are actually extra sweet, so they put in less sugar. Now, to the end customer, the ingredient list is the same. All we're talking about here is a minor difference in formulation. If we put a bowl of each in front of a customer and said, taste this, they probably would be able to not distinguish it. But from a manufacturing perspective, they're actually a little bit different. Think of it this way. If a company makes laptops, and they make laptops in 5 different plants around the world, what's the likelihood that every one of those laptops is identical to one another? And the reality is they may not be identical at all, because it might be that in one of our plants we have a way of sealing the case that doesn't require us to do anything other than clamp the case together, and the machine, let's say, heats it to kind of melt it a little bit so it's sealed. But in another one of our plants, we don't have a masher and heater, we just have a masher. So in that plant, before we seal the case, we put little dots of glue, and then we seal it. The fact is, if you went and bought a laptop from a company, let's say today, and then waited 6 months and bought that exact same model laptop from that company, and opened it up and truly examined all the pieces, you might discover that there are some things that have been changed. You might actually buy 2 laptops on the same day, but one of them came from one plant and the other one came from the other plant, and if you really looked at it in detail, you would discover a few things that were different. It all depends on, you know, what we're talking about and the nature of the equipment and the components and so on. But the fact is, this all gets potentially really, really complicated. We might make QQ-F01 in 3 different plants and use 3 slightly different formulas. It's kind of the equivalent of, I don't know if any of you have ever been out west, and I don't know if any of you ever engage in baking things, but if you've ever read like a box of brownies, sometimes on there it'll say, bake at this temperature for this long, except if you're over 3,000 feet elevation. And then it'll give you like a different set of directions there. That's what I'm talking about here. Well, how do we keep track of all this in our organization? How do we keep track of, you know, this is the way we make QQ-F01 now, but in the future, we might subtly tweak the formula, but we need to keep track of that. It's kind of like, if you go back in time, you're not going to remember this from experience, but you probably have heard of when Coke decided to do the really silly thing and change their formula to what was called New Coke. And everybody hated it, and Coke said, okay, we give up, we'll go back to old Coke. They called it Classic Coke at that point. Well, it's not like when they changed the formula, they just threw all the old stuff away and then they had to reinvent Classic Coke. They still had all that information. They kept track of that in terms of life cycle data management. This is managing things like product designs and product variations over time and alternate components and improvements and retirements. Let's say, for example, that one of the things that we use in making blueberry muesli is sugar. And for whatever reason, sugar has gotten really, really, really expensive. So we say, you know what? We still want to make blueberry muesli, and we think we can make this change without our customers knowing it too much. So we're going to delete the sugar, and we're going to substitute high fructose corn syrup in its place. Well, I can do that, but I'm going to have to redesign my formulation, and I'm going to have to figure out how this is going to affect things moving forward. By the way, this is also something that Coca-Cola did. Coca-Cola at one time made all their products with sugar, and then they switched out to high fructose corn syrup, and now sometimes maybe some of you get some of the Coca-Cola shipments that are intended for Mexico, because Mexican soft drinks still have sugar in them. I think you can go to Sam's Club, for example, and buy Coke made with sugar as an alternate variation. Well, life cycle data management is all of this information that we have to keep track of. The SAP GUI, which you guys run, there's actually transaction codes that will let you go in and do like CAD drawings of engineering products. And there's actually things in there that have like, you can do, I don't know what it's called, but where you can take CAD drawings and you can 3D render them and animate them to show like what this flywheel looks like when it's moving. All of that's a part of the system. All of that's a part of life cycle data management. We won't talk about this semester except for what I've spent the last 10 minutes talking about, but it's a key element for a lot of companies in their data management. And by the way, the last thing here, retirement. This is a real problem that companies have right now. It's kind of a funny problem to have that's been brought to us by the computer age. Accountants are very used to this concept where you have to store records for a set number of years, but then once that number of years is over, you destroy them. And sometimes that involves like you put things in bankers' boxes and you date it and you put it in a storeroom and nobody looks at it for 20 years, and then one day you go in and you check the date and you find all the old boxes and you say, hey, we can get rid of these now, and you shred them or you create a giant bonfire and you get rid of them. That has been traditional company operating processes for decades. In the era of distributed data processing, and now with the cloud, getting rid of everything can be really, really hard, because computer people tend to engineer things from the perspective of, okay, how can we make sure that this data never disappears? When you present them with a challenge like, okay, this recipe for Coca-Cola, find every instance of it everywhere in the world and make sure it's destroyed such that no one can ever find it again. That's a little bit harder, especially because computer people want to do the whole, okay, I'll find it and then I'll copy it before I destroy it. It's like, no. Every version of this has to be destroyed, you know? And that's really, really, you know, that's like a whole different class of problems that we tend to not think about. But that's what lifecycle management does, data management does for us too. We have all these records that we have to keep, and even after we're not making blueberry muesli anymore, we still have to keep the formula, but at some point in time, we will want to delete this such that our competitors can't find it, and such that it's kind of like gone forever and there's no record of it. And that's something that we are called upon to do from time to time. All that's part of life cycle data management. Questions or comments about any of this? All right. Inventory warehouse management, this is storing stuff. Businesses do not exist to store and move stuff. They exist to sell stuff and get it out. But a key part of that is making sure stuff is where it needs to be, when it needs to be there, for the sake of me to use it, maybe to make stuff, maybe to fulfill customer orders, but nonetheless, warehouse management and inventory management is a key part of an organization. If you have ever worked in a warehouse, you know how challenging this can be. If you have not worked in a warehouse, you probably have no sense of this. I worked with an operation, I probably have told this story before in some classes, so excuse me if any of you have heard this, where we had a food center warehouse, was what we called it, a big warehouse for storing food things. And we would buy things for the university and put them there until they were used in the cafeteria operation. Well, sometimes things would be inadvertently counted. And once they disappear off the inventory list, you don't know you have them anymore. And so if the inventory list says you have 3 pallets of ketchup and they're stored in slot A1, A2, and A3, if there's a 4th pallet of ketchup in slot Q4, but it's not on your sheet, no one will ever go and look for ketchup in slot Q4. So what you want to have happen is you want to have good warehouse people that periodically walk through the warehouse and say, hey, what's that stuff over there? We've never looked at that. What does the computer say is in that slot? And they say, the computer says that slot's empty. And you're like, doesn't look empty to me, and you crawl up there and look at it. If you don't have warehouse people that do that, every once in a while you wind up with a situation that I can remember quite well. We had a pallet of number 10 cans of ketchup get lost in the warehouse once. They fell off the inventory, so we forgot we owned them until such a time as we were doing inventory. And I remember I didn't normally work in the warehouse, but I was in the warehouse that day, and I looked up in the racks. We had like 4 stories tall of racks. And I looked up in the racks and I said, that pallet up there that's dripping green ooze, what is that? And they did exactly what I said. They looked at the inventory and said, there is nothing in that slot. And I said, well, at minimum, there's a pallet of green ooze up there. Let's pull that down and figure out what it is. And sure enough, they got the forklift out, they pulled it down. And ketchup is highly acidic, okay? And it's put in cans. And that usually works okay if you use those cans, say, in a year's time. But if the ketchup's been sitting there for, let's just say, 10 years, then the cans start to lose their integrity. Some of the cans had swollen up so they looked like they were basketballs. And if you know anything about cans, hopefully you know, stay away from those because that's botulism that's in there. And if you pierce the can, the gases that flow off can give you botulism, which is not a good way to start the day, okay? But then there were other cans that weren't doing that. They were just like dripping rotten ketchup that had turned green and was slimy. And so we the next stop for that pallet of ketchup was the dumpster. Now, I don't remember, but a pallet of ketchup is not cheap. I mean, that probably represented at least $1,000 or more of ketchup that just totally disappeared because it fell off our warehouse list. Well, we don't want that to happen. So in fact, modern warehousing has gotten really, really sophisticated, and a lot of companies have introduced technology like RFID tags, which you can tag product cases and use it basically to track a package like it has a built-in homing device. Walmart moved to using this a number of years ago in their pharmacy, but they did not tag all of their pharmaceutical products, or at least they said they didn't tag all their pharmaceutical products. They just tagged things like narcotics and other things like that, so that if, a box of some highly restricted drug happened to disappear, their system would flag it instantly because the computer basically automatically keeps count of those things on an ongoing basis. There's a lot of things that have been introduced in inventory and warehouse management to try and make it so that nothing ever gets lost and we can automate as much as this as possible. There are some companies that operate warehouses that have very, very few people in them. They're basically robots that drive around and pull pallets and pull boxes and fulfill orders, and people lose their jobs working in the warehouse, but they get jobs programming robots, so it's kind of a trade-off in the grand scheme of things. Comments or questions about inventory and warehouse management? Not glamorous, not exciting. We'll talk about it a little bit this semester, but we won't spend a long time worrying about it. Asset management and customer service. Yes, sir, Roger. How does the concept of depreciation factor into warehouse management? It's a great question. There are lots of inventory management things that have accounting implications. How do we cost our materials? There are things like FIFO and LIFO that we have to take into a consideration. The answer to your question and what I just commented on depends on how we configure things in our organization. Now in the US, we have GAAP and then IFRS as well that gives us principles and laws that we have to follow. But even within the scope of those things, companies have some liberty as to how they want to do things. And so some of that we will dig into in more detail. If you work in the warehouse, you probably don't care about depreciation. You might not even know what it means. But from an accounting record-keeping perspective, anything that we're talking about as assets, we have to have a depreciation schedule for, and we have to have a plan for how it's going to be depreciated. Other questions? It's a good question. Asset management, customer service. Minor but important process depending upon what we do in our organization. Customer service, you could imagine, for example, Geek Squad. Geek Squad's business model, as best I know, is people call them up and say, my computer's broken, and either you bring the computer to them or they come to you and they fix your computer. Well, that's an example of what we would call customer service. The customer requests assistance, you provide that assistance, and then ultimately the customer is going to be expected to pay for that. Some organizations have ongoing customer service contracts. Here at ETSU, pretty much every department on this campus has a printer. Every printer on this campus is a Ricoh brand, copier/printer. Every copier/printer on this campus is a Ricoh copier/printer because that is who the university has a contract with. Every department pays a service contract. That's a flat amount that they pay every month, and anytime something breaks, they call a phone number, a salesperson shows up and fixes it as a part of that service contract. So the idea here is maintaining our equipment, whether it's we're maintaining our own equipment or we have sold services to a customer to maintain equipment on their site. That falls into the category of asset management, customer service. Let's round out this set and call our time together today to a close here in a couple minutes. Human capital management, people. It's kind of interesting. This used to be called human resources management, but a few years ago somebody decided that, people are our most important asset, and so a lot of companies now call it human capital management. what you call it doesn't matter as much to me as how you actually treat your people. You could call them human capital and treat them well. You could call them human capital and treat them like garbage. They probably care more about how you treat them as opposed to what you call them. But human capital management is all of the record keeping that goes along with managing people in your organization. The people that work in your company probably want to get paid. So payroll is a very important facet of this. The people in your company probably expect you to provide them with certain benefits. Benefits management is a part of this. What a lot of companies have moved to recently is really allowing the employee to take much more ownership of their benefits. And so it's not unusual in some organizations for employees to be able to log on to a website and choose from a whole set of things that are available to them. Some organizations have extended that to the point that if an employee wants to build his or her career, they can log on to a website and they can sign up to take classes sponsored by the organization. And when they have finished those classes, they get basically a line added to their profile that says what they have done and what they haven't done. And in some organizations, managers that are looking for new employees to work on a project can go into the system and say, give me a list of employees that have done this training, that have these characteristics and match this profile, and the system builds them a set of employees that they can then try to recruit. My point is, some companies get really, really sophisticated with human capital management. Some companies just do the required things like payroll and benefits management, but that's a whole set of processes. We're not going to do much of anything with human capital management this semester. Financial accounting and management accounting, though, we will do a whole lot with this semester. And in fact, the first lab sequence that you are using, you're getting the foundation laid for us to do a lot of financial accounting. Project management. This is planning and executing large-scale projects. Perhaps some of you have worked with software tools like Microsoft Project before. There is a software tool built into SAP ERP that you can access through the SAP GUI that does everything that Microsoft Project does. It'll create the pictures like Microsoft Project does. It'll let you manage a project. All of that, you do it in the context of SAP ERP. The nice thing about that is as you incur costs or as you make various decisions, you're actually working with live company data, and your information gets pushed back into other parts of the system. Project management often comes into play when you have a company that makes things, but production takes an extended period of time. I think I might have mentioned this before, but the construction of the football stadium on the ETSU campus would be an example of something done through project management. If we worked for Boeing and built aircraft, the time it would take to build just one aircraft spans months. So we would have a project set up for the manufacture of that aircraft, and all of our planning, our budgeting, the actual day-to-day execution of the project, all our settlement of costs would be done through project management. And we will come back and talk about that a little bit later in the context of managerial accounting. This diagram is one that SAP has for the most part retired now, but they used to use this picture a lot. They called it their process map, and it kind of was intended to give customers an overview of all the different processes that you could manage inside of SAP ERP. For example, you could not only manage procurement, but you could collaborate with your suppliers, you could manage your inventory and warehouse, inbound and outbound logistics and transportation management. You have a fleet of trucks. You need to route those trucks on delivery routes and things like that. You can do that with your SAP ERP system. The point of this slide is that with this diagram, you used to be able to click on these individual squares, and they would explode into like 10 or 15 other squares that were more detailed. Inside of SAP ERP, there are thousands of these different business processes. that an organization can decide what they want to use and what they don't want to use, and then they go in and set it up to work the way they want it to work. The SAP ERP system is modular. This is a good slide for us to end with, but let's write some stuff down here that's really important. This is the kind of thing that you may see in the future when you go look at job ads. It is not possible for everybody that works with SAP to understand how the whole system works. As a matter of fact, people that work with SAP tend to just focus on a very limited subset of the overall functionality. This diagram is one that SAP used to use a long time ago, and what I like about this diagram is it illustrated one of the facets of an ERP system was if I worked in this module right here and something happened, it would be akin to I would take a rock and throw it here into this lake, and just like in a real lake, if you did that, it would send waves radiating out that would be picked up by all the other processes in the system. So the idea here is this is a modular system, but the modules communicate with each other, okay? What are the modules? Let's at least start on this until we run out of time. FI, financial accounting. CO is cost accounting, or sometimes called controlling, or sometimes called managerial accounting. All are basically synonymous with one another. It is very common for you to see FICO listed in SAP ads. This is looking for someone who understands how SAP ERP does accounting. You will also sometimes see COPA. Now the CO here stands for cost accounting. PA isn't part of my diagram. Any accounting people have a guess as to what PA might be? Profitability analysis. Okay, so sometimes you'll see this. This is someone who gets more into the managerial accounting. So that's why I say, you know, the ad won't say, we're looking for a FICO person. Oh, and by the way, that means you need to be an accountant and go through. They'll just say SAP FICO and expect you to realize that what they really want is an accountant who knows about SAP. So that's where these little two-letter abbreviations come in really, really handy here. I'll just give you one more to round out the upper tier here. AM, I think that just has one T in it. Asset management. We have trucks, we have buildings, we have equipment, we need to track all that. As was mentioned before, we need to depreciate all of that. Asset management is the module in the system that lets us do that. All right, well, we are out of time for today. I will see you guys when we get together on Thursday. Have a great afternoon. If anyone didn't get a chance to sign in, the sign-in sheet here is up at the front, so please make sure you do that.